Hey traders, 𝐿𝐼𝐴 or Mini-Frost here. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 4th, 2025. We're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, really, today was another nothing day. We're only up 0.07% today. We're up 50 cents. And just taking this thing to a shorter time frame, we're still eating time off the clock. We haven't really gone anywhere within the last 5 or 6 days or so. We've just been trading in this given range. So even though we're only up 50 cents today, Mrs. Market did give us some puzzle piece information within the intraday session, one of which was how we were trading that trend line. We had two major trend lines that we were talking about for the last few days or so. One of them comes in from the previous all-time high, connecting to this pivot high, November 12th, and then also we had another one from right here, the 3rd of November, to the same high right here. And just taking a closer look at this trend line right here, we were continuously using it as overhead resistance until yesterday we started to get above it. And what I said yesterday was that that's normal garden variety behavior. It's not unusual that we spiked through that trend line towards the upside, especially when we've been trading within this given range for the last few days or so. And what I also said was that it's not unusual behavior for the market to come back down into it, spike below it, and then try to use it as support on the way back down, which is pretty much what we saw today. For today, I think it's best if we work backwards and start with inside the numbers, and that'll help formulate the shorter term and longer term perspective. So right now we're taking a look at the 0 dark 30 notes. This is the morning game plan that's laid out well before the opening bell. Some key numbers that you have to know is today's morning pivot that came in at 684.35. That was an extremely important number, and you'll see why in a second. We also had an overhead resistance number that came in at 685.65. We came up about 20 cents short, give or take, so we don't really need to worry about that number. But what you do need to know is this support zone that we had at 683.30 to 682.40. So right at the vertical line is today's activity. We got the pivot in green. We have the black line that represents the trend line that we were just talking about. And then the two support numbers creating a support zone. 683.30 to 682.40. So pretty much right at the morning we had some decent selling pressure. Remember, we had a overhead resistance number that was near 685.65 give or take. So we did come up short, and the destination down below was the pivot. But then I also mentioned in the notes, and we were talking about this in the live room, that with this early morning selling pressure that we were receiving, we can easily go ahead and fill this gap right here. The gap came in at exactly 683.81. As you can see, spiked it by just a touch, and then ripped it right back up. Where to? The morning pivot. A little bit of a spike through the morning pivot. So we did have some live room members take that trade. A little bit of an early morning base hit. So now here's where things get a little bit more interesting. After coming back up towards the pivot and then eventually closing candles below, the next destination was going to be this first support number at 683.30 that also coincided right with that trend line. And as you can see, we were eating some time off the clock for a little while right at that support number and the trend line. The market certainly knows about that area. Then eventually, we got down to the back end support number at 682.40. We made a low of 682.17, spiked it by a touch, and then ripped it right back up. Where did we rip it right back up to? None other than the morning pivot. How you doing? It's extremely important that you know your morning pivots. And we have a morning pivot every single day in the live room and inside the numbers. But here's why that trend line is so important, and I'm about to prove to you guys that Mrs. Market certainly knows about that trend line. So in the notes coming up towards the first hourly close, that was going to pretty much be the tell. Okay, we were watching to see if we were closing below or above that trend line on an hourly close basis. Closing candles on a larger time frame, because that's going to hold more importance than closing candles above or below the trend line on a 5-minute time frame. The larger the time frame is, the more dominant it is. So as you can see, at 10:26, 5 minutes, technically 4, until the hourly close, and we're already getting a sell-off, and we're below the trend line, and below the 683.30, the front end of the support zone. And then again, at 10:28, 2 minutes before the hourly close, we came right into the 682.40 number. That was the back end of the support zone, found support off of it, and then we were already back towards that trend line. Staying above 683 and the trend line is bullish behavior. And then here's the final note. At 10:31, hourly close, we closed above 683.30 and the trend line, and then notice how we had a sell-off to grab the unfinished business at the back end of the support zone, and then immediately shot right back up and closing above all the important levels. That's bullish behavior. So going to a 1-minute time frame, Getting a better perspective of this, at 10:25, we managed to reach the back end of that support zone. That was at 682.40. From that moment, we immediately shot right back up, started to close candles above the 683 number and the trend line, pretty much right at the hourly close. Right here is at 10:30, closing above all of that important stuff. And remember, I said that we were using the hourly close as pretty much the tell. Closing above the trend line, we're in a more bullish position. Closing below, obviously bearish. In the first hourly close, we closed above it, and then from that moment, where did we go right back to? You guessed it, the morning pivot. Came back down, ate time off the clock near the first support number and the trend line, and then did the deed a second time at the 682.40, right here. Came back up, ate some more time off the clock at that trend line, back towards the pivot, playing ping pong back and forth, and then towards the afternoon session, aka torture time, we were hanging below the pivot for a while, made a break through the support zone, the trend line, made a low all the way at 681.34, but the key takeaway from today's activity was that we're closing above that trend line. And pretty much a majority of the day, besides the sell-off at around 2 o'clock today, we were utilizing that trend line as support, which is practically what we talked about in the video yesterday. So just to wrap things up, going back over to the daily time frame, yesterday closed above it, today used it as support on the way back down, and we're closing above it. As of right now, that's some bullish behavior, but capital B-U-T. We are in an on-time situation. We do have a tinfoil hat event today. This is the last supermoon of the year. This one's called the cold moon. And with these tinfoil hat events, generally speaking, we're looking for a turn in the market. We are getting slightly extended from home base, and we are currently testing an important overhead resistance zone, basically from 685 to 686. So we do have those things to work with, but on the flip side, just looking at this in a pure technical analysis perspective, we are in a bullish position, above all the moving averages, now above the trend line, and using it as support. So that is obviously bullish behavior, and we do have one more piece of unfinished business up above, which is this gap right here at 687.39. That's pretty much the last gap that we need to complete towards the upside. But here's the thing, at this stage in the game, pretty much anything can happen. We don't know 100% for sure whether we're gonna go ahead and fill that gap, or if this is gonna be a little fake out situation and we have to make our way back to the main destination that we were talking about all of last week, which is right around 675. It's this gap right here that needs to be filled, coinciding with a breakdown candle high. You got two moving averages right around there, the 20 and the 50. Already mentioned that we are extended from home base, and that certainly is an important area that Mrs. Market is going to want to head to one way or the other. Might not be tomorrow, might not be next week, but with time to come, we're certainly heading to that area. Tomorrow is going to be an extremely important day. It's Friday, it's the last trading session of the week, and remember, the larger the time frame is, the more powerful it is, the more dominant it is. A weekly is more powerful than a daily. So if we do manage to close below the trend line, we have this one right here, and then also we do have this one as well. If we close candles below at least one of them, that's going to raise a flare up in the air. Tomorrow is going to be the key tell. At this stage in the game, it's really a coin flip. Are we going ahead to the gap as we're just eating time off the clock, building energy / recocking the gun for another move higher, or with the combined reasons of the on-time situation, the tinfoil hat event, extended from home base, and seeing how we treat that trend line tomorrow, we could start to move in the other direction. I'm telling you, one way or the other, the market is going to want to head to that 675. We blew by it the first time, but that was because we were in a low participation type of tape, the Thanksgiving floater. Just because we blew by it the first time doesn't mean it's any less important. It's only a matter of time, and time is more important than price. And we are in an on-time situation. Now let's take a quick trip around the world and take a look at some of the other markets we have, starting with Camp IWM. We're up 0.88% today, and we blew right past that trend line. We can also put a line at the previous all-time high that came in at 252.77, and today we made a high of 252.66. Funny how that works. So we got two things that we need to keep an eye on. The first one is how we keep treating that trend line. Are we going to be able to use it as support on the way back down to try to build up energy to take out the 252.77, the previous all-time high? And the second thing that we have to keep an eye on is obviously how we treat the previous all-time high. This can be one of those spike the highs and then rip it right back down in the other direction. We have to see if we could start to close candles above the previous all-time high. It's not unusual that we start trading above the high. Who's not to say we can't poke our heads through, but the main key takeaway, and we talk about this a lot, is how we close the day. It's not about how you trade them intraday, although that stuff is important to an extent. What's more important is where we close the day. It's not how you start that's important, it's about how well you finish. We're gonna have the numbers ready for Camp IWM, and some numbers in that uncharted territory. The transportation department is on an absolute rip-roaring rocket ride recently. We did have an overhead resistance number, more so a zone, stretching from 17,000 to 17,450 give or take. As you can see in the intraday activity, we did find some initial overhead resistance. It's a big fat round number, the market certainly knows about that number, so we did have a nice little bounce in the other direction, but then immediately we got back above it and then started to use it as support on the way back down. And in today's activity, we did the same exact thing. Spiked through it a little bit, but then closed candles above, and then never looked back. We're only up 0.21% today, so it's not a huge day for the transportation department, but we still are closing candles above that front end resistance number. That is bullish behavior for now. We are in an on-time situation. We could go up a little bit higher, maybe potentially get to the midpoint between the two numbers, or even head to the back end of the resistance zone. But we are approaching a critical time period, and time is more important than price. Always. If we can close candles below the 17,000 tomorrow on a weekly close, that's a little flare up in the air. We're gonna keep an eye out for the transportation department. But as of right now, no real major change. What's going on with the Q people? Well, if you remember correctly, we have two important numbers. One at 621.08 and the other one at 624.84. Today's high was 624.94. And then where did we go right back down to? 621.08. And we now close the day between these two numbers. So the top number, obviously important overhead resistance, a place where the market shouldn't just waltz right through, at least from an intraday perspective, which you just saw today. But then the bottom number is still being utilized as support on the way back down. So really, there's no major change with the Q people. Not until we see tomorrow's close. We're only down 0.09% today. The spiders were up like 0.08 or something. So we're not going to make a huge federal case out of this. No real major change. And we really just have to wait for tomorrow. If we can start getting above this number, the 624.84, and then eventually take out these highs right here, the next destination is this gap. That's the key target towards the upside, and pretty much the last bit of unfinished business that we have to complete. But on-time situation, we certainly have to keep that in mind. Interesting stuff in XLF. We're up 0.21%, and as you can see, should be pretty obvious that we're closing above that trend line. As of right now, that's bullish behavior. Doesn't mean we have to keep closing candles above it tomorrow. Anything can change with the snap of the fingers, but for now, that's bullish, closing above it. If something changes tomorrow on the weekly close, and we start closing below it, then we already have some destinations laid out. We have the 52.54, this gap right here, another gap down below, and then also we have this most recent breakup candle low that coincides with the 50 and the 100 period moving average. Gotta see if we could stay above on that weekly close. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. We're down 0.76% today. If you remember from yesterday, we do have two important numbers up on the board. 364.28, that's this high right here, and as you can see, as of right now, it's a little bit of a spike to high and then rip it right back down. And then the next number up above is 366.10. That's this gap right here. But then here's something a little bit interesting today. We also have that trend line that we were talking about. This one is an upwards trend line, and we've been utilizing it as support on the way back down. But today, if we go over to a smaller time frame, such as a 10-minute chart, we can see that we've been utilizing that as overhead resistance in the intraday today. And now we're closing candles below it. That's definitely some interesting information for SMH. We have to see if we can continue to close below it. Can that be a little bit of a tell in the other markets? Potentially. Remember, anything can change with the snap of the fingers. Just because we're below it today doesn't mean the same situation will apply tomorrow. I can't stress enough, and I probably already said this like 10 times, but that weekly close tomorrow is pretty much going to lay out the entire bigger picture perspective. We gotta wait and see what happens tomorrow. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm Mini Frost. Please don't forget to like, comment, subscribe on the video, as it helps me and the channel out a lot. I hope each and every single one of you has a great rest of your day. Have a great weekend. Stay safe and take care now, folks.